Let me ask you something real quick. What if the car sitting in your driveway right now suddenly becomes too expensive to insure? Not because you crashed it, not because you drive recklessly, just because the math changed. That's not fear-mongering. That's exactly where the insurance data is heading. Right now, insurers are quietly repricing risk. They're not looking at brand loyalty or how careful you are behind the wheel. They're looking at theft rates, repair severity, sensor recalibration costs, and how often certain cars get totaled from surprisingly small damage. Some models are stolen so frequently that insurers treat them like ticking time bombs. Others, especially newer tech-heavy vehicles, cost so much to fix that a minor fender bender can trigger a total loss decision. And here's the part nobody really talks about. Once a car ends up on the wrong side of insurance data, it doesn't matter how good the deal was when you bought it. So before you finance, before you renew full coverage, and definitely before 2026 locks these rates in, you need to know which cars insurers are quietly pushing toward the uninsurable zone. Because the most expensive car isn't the one you buy, it's the one you can't afford to keep insured. Range Rover, this one hurts. Because on paper, the Range Rover is the dream SUV. Comfort like a private jet lounge. Real off-road capability. Status, presence, the whole package. But here's where reality hits you right in the insurance premium. Insurers don't see a dream SUV. They see a high-risk, high-cost target. Modern Range Rovers have been heavily targeted for relay theft, where thieves capture the key fob signal and drive away in seconds. The problem got serious enough that Jaguar Land Rover stepped in and created a bespoke insurance product for Range Rover owners, while also rolling out ultra-wideband keys to fight theft. That alone tells you something. When the manufacturer gets involved in insurance, it's because traditional insurers are nervous. And even if it doesn't get stolen, repairs are brutal. Aluminum body panels, complex electronics, cameras, sensors. A relatively small hit can turn into a massive claim. From an insurer's perspective, this is the worst possible combo: high theft risk and extreme repair severity. Heading toward 2026, the math is simple. More theft data, higher repair costs, tighter underwriting, and if you think theft alone can wreck your insurance, wait until we get to the car where barely touching it can trigger a five-figure repair conversation. Tesla Model S. This is where things get quietly expensive. Because with the Tesla Model S, it's not the big crashes that scare insurers, it's the small ones. Tiny damage, massive invoices. According to Mitchell's U.S. Insurance data from the first quarter of 2024, electric vehicle claim severity is meaningfully higher than gas cars. The average EV claim came in at $6,700 compared to $4,650 for internal combustion vehicles. That gap matters a lot when you're paying premiums. And then there's the battery. If the battery housing is damaged or flagged as compromised, replacement costs are commonly quoted in the five-figure range, often between $15,000 and $20,000 plus, depending on configuration and labor. At that point, insurers don't debate. They do the math. What really pushes Model S insurance higher is repair complexity. Aluminum-heavy construction, integrated sensors, cameras that require recalibration. A cracked windshield isn't just glass. It's cameras, software, and labor stacked on top. Insurers aren't saying we hate EVs. They're saying, this car is expensive to put back together. As we move toward 2026, more claims data means less guesswork and higher premiums baked in for tech-heavy EVs like this. And if you think high-tech EVs are the whole problem, wait until you see how a car built to save money ended up costing owners way more than expected. Toyota Prius. This one surprises people because the Prius is supposed to be the safest, smartest, most responsible car you can own. And mechanically it usually is. But insurers aren't worried about engine reliability anymore. They're worried about theft frequency and repair economics. The Prius has been one of the most frequently stolen vehicles in the U.S. for years, largely because of catalytic converter theft. Thieves target it because the hybrid system uses higher concentrations of precious metals, making it faster and more profitable to strip than many other cars. From an insurance standpoint, this creates a nasty pattern: high claim frequency, fast thefts, repeat losses. And then there's the repair side. Hybrid components, underbody damage, and emissions repairs aren't cheap. Even when the car is recovered, insurers often face repair bills wildly out of proportion to the car's market value, especially on older models. So while the Prius saves money at the pump, insurers increasingly see it as a repeat claim vehicle. That's how premiums creep up quietly year after year, even though owners think they made the safe choice. Heading into 2026, this is exactly the kind of car that catches buyers off guard. Not unreliable, not flashy, just expensive to insure for reasons nobody talks about. And if you think that kind of risk only comes with small cars, wait until we look at the SUV that feels harmless but quietly stacks expensive claims. Jeep Grand Cherokee. This one flies under the radar because it feels so normal. Family SUV, comfortable, capable, nothing about it looks risky. But insurers see a very different picture. First, theft. The Grand Cherokee has consistently ranked among the most stolen SUVs in the US, especially in metro areas. Second, repair costs. Modern Grand Cherokees are packed with advanced driver assistance, systems, and increasingly complex electronics. From an insurance perspective, this creates a bad mix, frequent claims and elevated repair severity. Owners don't notice it at purchase. They notice it when the renewal jumps, and nothing about their driving changed. Hyundai Sonata. This one catches a lot of people off guard because the Sonata feels safe. Family sedan, sensible choice. In 2023, the Hyundai Sonata was the second most stolen vehicle in the entire country, with 42,815 reported thefts according to the National Insurance Crime Bureau. Once a vehicle starts generating that level of theft data, premiums react fast. That's how a smart buy turns into a financial headache. Kia Sportage. The Kia Sportage was supposed to be the safe middle ground. Practical size, long warranty, solid features for the money. According to the National Insurance Crime Bureau, the Kia Sportage ranked in the top 10 most stolen vehicles in 2023, with 1,550 reported thefts nationwide. Once a model shows consistent theft losses, premiums follow. Chevrolet Camaro. The Camaro looks like a weekend toy. To insurers, it looks like elevated risk from multiple angles. First, theft. Second, crash severity. Cars with high power-to-weight ratios generate more severe claims when things go wrong. So while the Camaro isn't exotic, insurers still treat it like a high-risk performance vehicle. Because the most expensive mistake isn't buying the wrong car. It's buying the right car with the wrong insurance reality. And if you want more breakdowns that actually save you money before the mistake happens, hit subscribe. I'll see you in the next one.